Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Rod Cleef, and I'm thrilled that you're here. And I know you're going to get tremendous value from the young lady we're interviewing today. Her name is Paulina Likos, and she's an investigative reporter with U.S. News and World Report. And her coverage area is the stock market, real estate investing, among lots of other things. And before that, she had a degree in political science. So we're going to have kind of a wide-ranging conversation about what's happening in the market today. Paulina, welcome to the show.
Rod, thanks so much for having me.
Yeah, so could you expand on your background a little bit? I didn't do it justice. Can you tell us a little bit more about who you are?
Yeah, absolutely. So I'm an investing reporter with U.S. News and World Report. And as you mentioned, out of college, I started working at Fannie Mae. And for those of you who might not be familiar with the company, they're chartered by the U.S. Congress, and they provide mortgage financing in the U.S. So I was in the single family side as a credit risk analyst. And during my time there, I worked with lenders to support their business, to originate quality mortgage loans that fit Fannie Mae's requirements. And I worked with lenders of different sizes in different regions, and I really enjoyed tracking and assessing the lender's performance and really everything that goes along with that. But I was really questioning how things work. So for those of you who might be new to the mortgage industry, even if you're even a few years in, it can be a complex industry to understand because there's so many moving parts. There's a bunch of participants. So I was questioning not only the dynamics of the mortgage industry, but more so how the economy works and really what makes the world go round. So fast forward to today, I'm in journalism. So I've always had a strong passion for journalism. And so it was a natural progression for me. As an investing journalist, I like to take the macro view of things to see what's happening in the world and then distill it down to the topic at hand. So you know where we were and where we got to here. So I think that's what I was missing in my job before. So I write articles on a variety of topics, particularly real estate investing, but also portfolio management, emerging markets, and investing trends more broadly in the context of what's happening in the markets today. And you know, these articles are for retail investors who are looking to get a breakdown of the complex investing topics that we see in the markets and in the news, ultimately to further educate investors to make sound investing decisions.
Love it, love it, love it, love it. And I called you an investigative reporter. Oops, I'm so used to that term. I didn't even think it, I missed it's really investing reporter. So you focus on investments, which is awesome. Most of my listeners know what Fannie Mae is, I think, because that's, they provide, they and Freddie Mac provide, non-recourse lending for our marketplace, which is just fantastic. But I know that you've studied this new infrastructure package, and I would love to get your take on if you could outline what you know about the $2.3 trillion. If you guys want to see something interesting, go online and see what $1 billion looks like compared to $1 trillion. So you have some idea of just how massive that amount is. But could you outline that infrastructure package and what it entails?
Yeah, absolutely. So this is the largest investment in the US we've seen since World War II. And what the administration is putting forth is this plan. Their case is to, America needs to remain competitive in the 21st century, right? And by investing in these physical infrastructures, we're driving the future and improving our competitiveness, particularly against China. So this initial rollout, as you said, $2.3 trillion infrastructure plan, and it would cost, the debate is how much it would cost. There's still negotiations being had, but this cost would be spread throughout 8 years. And it focuses on improving the quality of existing infrastructures, but also the building out of new infrastructures like roads, bridges, transportation, and more importantly, I would say the electric grid. And the president's hope is to make these investments in order to create quality jobs but also to create opportunities for businesses that could help with the design, with the construction and the manufacturing of these infrastructures. One of the central initiatives of the plan is to tackle the climate crisis. And this is a theme that I think will stick throughout parts of the conversation today. There is a strong focus on building out clean energy for communities. There is disagreement on the amount of money being spent and what actually constitutes infrastructure, the definition of what infrastructure is. So negotiations are going on in Washington right now about both of those fronts. So that's kind of what the plan is generally and what it entails and what the status is and where it kind of stands right now.
Okay. Okay. Well, as we talked before we started recording, I have strong feelings about all of this, just because, in my view, somebody's got to pay for it. Based on what you're reporting and you're interviewing, what have you found to be the sentiment in the real estate market about that particular infrastructure plan? I know there are other bailouts and things like that have happened. The Trump administration is still happening now with the Biden administration, but this particular infrastructure plan, what are you hearing from my confederates?
That's a great question. And I spoke to several sources when I was writing this article, and one of them told me that they're having a series of roundtable discussions in a variety of different sectors, like the technology sector, the automotive sector, manufacturing sector. And they did that in order to get a broad input from their clients, to get their views on the sentiment around about the plan. And ultimately, they're actually optimistic. They're excited about the plan. He said there could be a quote unquote transformation in the real estate segment. Because when you think about the retrofitting of commercial buildings and building out of these clean energy infrastructures, that presents a huge opportunity for real estate investors, but not only limited to real estate investors, also to the construction industry and companies coming out with goals of being environmentally sustainable and energy efficient. So clean energy here is very important. And Biden's plan specifically targets climate change and clean energy investments. So I would say that it's a very exciting time for this sector. We're also seeing a shift, experts say, in how electricity is being produced. So we're moving away from fossil fuels to more environmentally friendly power plants like wind and solar and so forth. Technology is also changing. It's changing very fast. And over the next few years, I think we'll start to see some changes in how our power is being generated and transmitted. So this shift towards clean and electric energy, sources say, are going to be in high demand. So there's a lot of work being done in this space that will be had across the country, and companies that will be working on these new technologies and companies that are working towards sustainability initiatives will experience growth. Now, there's also the manufacturing part of it. So large scale manufacturers will be working on clean energy sources as well. So you're going to have these different industries and sectors that need to work together. We might see experts say the build out of private public relationships, and the government will need to come in and align their goals in order to make this happen. Now, that's easier said than done, but that needs to happen in order for the goals to be achieved.
Yeah, I was going to interrupt because I love Ronald Reagan's line about be afraid when the government says they'll handle something for you. Something I'm paraphrasing, obviously, but how are we going to pay for this? How will this, what are the concerns that you're hearing from real estate industry? I know you can't talk about maybe who you interviewed, but maybe you could speak to the types of people that you interviewed in the real estate sector and how they feel about how the plan will be funded.
Yes, so there is a huge concern about how this package is going to be financed. the administration came out with this Made in America tax plan. And this proposal is a tax provision that will essentially help fund the infrastructure plan we've been talking about. So this plan, the Made in America Made in America tax plan, would raise over $2 trillion within 15 years to pay for the American Jobs Plan. And just a clarification, America Jobs Plan and Infrastructure Plan are one and the same. So some of the details that this other tax plan would include, and we've heard some of it in the news, are raising the corporate tax rate from 21 to 28%. Some are saying that that could be around 25%. Setting a global minimum tax rate for US companies. And that actually has been set this week. It came out, it's been set to 15%. Also, a big one is eliminating incentives for US companies to locate investments overseas. So those are some of the things that the administration put forth that on a corporate level people are concerned about, but on the individual level, the president's proposal to increase taxes on individuals who are earning over $400,000 through either increased marginal tax rates or some sort of modification in the capital gains taxation. Anything that has to do with limiting these benefits is something that people are concerned about. So these are major concerns coming out of the market.
Huge concern for me. I actually believe personally that and the 1031 exchange dialogue is going to create the next contraction we see. I really believe that could very well be the catalyst for the next contraction in the real estate market. So it's a big concern for me. How do you, what are you hearing from others about their concerns as it relates, real estate investors specifically, their concerns as it relates to the potential tax changes that the administration is talking about?
Yeah, so people in the industry are saying that, of course, you know this better than anyone, Rod, it's important to consider what implications of the tax treatments are for real estate investors. So many real estate investors feel that the 1031 exchanges could be targeted for some sort of modification. And, just a definition, I'm sure your listeners know this, but 1031 exchange allows you to defer paying capital gains tax when you sell and buy a like property. So experts are telling me that when you start modifying the tax treatment that we just talked about, as well as the 1031 tax exchange, investors may have second thoughts about investing, real estate investors. But because this also includes developers that finance these deals. Because if you think about it, when you start a real estate project, any sort of real estate investment, you have considerable risk. How are you going to offset that risk? Well, you have these tax benefits that help mitigate these risks. So real estate investors, they may be wondering, okay, some of these policies, are they going to dampen my benefits? If you lose these benefits, a lot of investors in the commercial real estate sector, they're going to maybe think about participating less, or maybe think about not participating at all. So ultimately, my sources say that when you roll out this spending plan, which such big capital spending, you have to have the correct tax laws in place so real estate participants can benefit, or else it's going to be a challenge.
It's not. It's a challenge is underestimating is too soft of a word. I actually think it's going to be a catastrophe personally, and because if you're in my world, we buy and sell larger commercial real estate projects, and if that capital gains goes up like they're proposing, and then someone cannot do a 1031 exchange, which is what keeps the movement in the marketplace. I think the tap is literally going to turn off. I mean, why would someone sell? I mean, there'd be no point to selling at that point. And sometimes that's a real, a question mark. Should we sell or should we just refinance or, pull our money out through a refinance and just hold onto this asset? But if we're going to take a big tax hit and we can't roll that tax hit, why would we ever sell? Which is, to me, to me, it's kind of obvious that it's going to massively impact my business, this multifamily real estate business. I'm praying it doesn't go through, frankly. So this is my opinion, guys. This is opinion. That's all it is. But
I did have a little bit of insight on that point that you just mentioned about selling. So during my interview, one of the sources said that he's seeing more groups of private investors with institutional money talking about selling their assets. So that's something that people are considering and actually working on because they don't know how this tax treatment is going to play out. So there could be, yes.
If that's what you're saying, in advance of this tax
correct.
Right. I just want to be clear. They're talking about selling right now so that they're out before it happens. So yeah. Okay. I'm sorry. I just want to be.
Yeah. No. And then just to conclude that there could be a potential increase in these potential sellers. That's all I wanted to say on your point earlier.
Very well could be. If it starts to look like it's coming down the pipe, I think there'll be a lot of frantic selling at that point for sure. It's very sobering to me, and I think we're due for another contraction anyway. Real estate goes through cycles. I've gone through several of them already. Of course, the '08 crash kicked my butt, but they're, it's like anything. It goes through cycles, and we're due for one. And I actually believe this could be the catalyst. But on the negative, that's the negative side. What are some of the areas in the market you think people might benefit from this plan? What are your thoughts on that?
Yeah, so companies, as I was discussing earlier, this green initiative is a huge part of the plan. So companies that are green, experts say are going to benefit the most because this is a central theme of the policy. So we are seeing this ESG, environmental social governance investing manifest across the country. Climate change is a movement. People really care about this. So companies that are at the forefront of this are going to do well. And, any of the large home builders, their stocks that are looking into these projects will do well. Also, REITs, real estate investment trusts that are involved in these areas are set to benefit as well. So having investments from this size will create opportunities also for bidding, opportunities from general contractors to subcontractors across different areas and different trades. So companies that have an appetite for these infrastructure plays and that can handle these infrastructure projects are going to find opportunities. Now, for individual investors who are looking for this approach, they need to look at geographies, experts say, where money is being infused in these areas, where there's going to be growth in these areas in either commercial or residential real estate. So someone who recognizes that early on, they see, okay, this money is going to be affecting this community. I need to invest here. And, that's where the opportunities.
Sorry, I interrupted. You're talking about tax funding money. It's looking in an area to see where that area may be receiving some of this $2.3 trillion. Is that what you mean? Precisely,
yes.
Gotcha. Okay. So that you be an opportunist in that regard. Yeah, I think, I'm struggling. It's sure it'd be great for contractors, it'd be great for companies that are doing the green thing, and there'll be opportunities. There's certainly the opportunity zones and places where this funding may show up. But I think, as a whole, it's frightening to me. And again, this is my opinion, because I really think it could slam the door on what we've been seeing as far as the market, buying and selling of these assets. And it's been, and I don't know, maybe that's the idea, is to slow that down. Who knows? But I am concerned about it. And we'll see how it all shakes out.
Many people echo your concerns. I agree with you.
Leaving the politics out of it, this is strictly, I'm a capitalist, I'm a business person, no doubt. I'm also a philanthropist. I'm not just like totally greedy money guy, but the I feel like this could really negatively impact commercial real estate in general. And I just remember, I'm 61 years old, so I've been through some of this stuff before, and I remember, when the government got involved and slowed things down in the past. And so, who knows? I guess it just remains to see what it ends up looking like. And unfortunately, I don't think they have much to stop them, honestly, from pretty much enacting whatever they want at this point. And so that's even more sobering to me. But we'll see what happens. I hope it's not as bad as I expect. I can tell you, I'm getting in cash because with crisis comes opportunity, and this thing slows down like I think it may. In 2008 or 2009, I was hiding under a rock because I lost $50 million, and I hope that won't happen this time. If it happens again, I'll be ready because I know people that just exponentially increase their wealth, through that contraction. So, but is there a question that you wish I would have asked you? I know I've thrown my opinion out here, which probably isn't fair, but I couldn't sit here and not say anything. Is there a question you wish I'd have asked you, or you want to have any kind of final comments about either what I've said or what we've discussed here in general?
Yeah, so this plan is still in negotiation, so there's still more developments to be had. I think that from what I'm hearing in the industry and from what I'm gathering in general from real estate reporting, it's important to understand where the industry is going and see what trends to look forward to this year. I think that will be helpful for the real estate investor to find opportunities in different areas, and just to pay attention not only to what's happening in the markets, but also what's going to be happening with these potential tax implications, because that I feel like that might be a determining factor for real estate investors when they're pursuing opportunities. But yeah, it's a big plan, and there's some big projects. So I will keep my eye on it.
No, if anything further develops that you've got your ear to, please reach back out to my team and get back on, because this is really helpful. Now one last question I've got. Do you feel like any there's certainly many sectors in our business. There's multifamily, there's office, there's retail, there's self-storage, there's mobile home parks. Do you feel like any sectors might come out better than others? Does anything come to mind if I ask that question?
That's a good question. And while I'm not an expert in the space, I would say that any sort of infrastructure, let's say commercial, multifamily, any sort of real estate that supports technology, I think that area will bode well, because technology is such a positive disruptor. I mean, we've seen just throughout this past year during the pandemic, that has been the support for us to continue our day-to-day lives, to continue working, to continue ordering things online, and really pushing our life forward. So I think that investments that are supported around technology and 5G and anything related to that will do well. Of course, different areas of real estate come with their own risks, as everyone knows, but and everyone has to do their own due diligence. And of course, nothing I'm saying is investment advice, just some observations. But yeah, I think technology and, as we've been saying, clean energy are two sectors that will be poised to perform well.
Sure. Well, and guys, let me just say this: those of you listening, listen. I am buying right now. We're putting a 269 unit under contract probably Monday. But that said, I'm very, very conservative right now, because I do feel we're poised to have contraction. Doesn't mean you stop buying. It just means you just have your eyes open and not to be fearful about it, just to be ready if it happens. And we'll come up with other ways to mitigate things. Hopefully, there'll be strategies that come out as the legislation goes through as written. And So again, do not poke your head in the sand and think that it's all over, because it's not. But it is good to be aware of it, keep your eye on it. And Paulina, I really appreciate you coming on the show. And again, if you have further insights, please reach back out to my team. This has been very valuable. And I'll try to be less opinionated the next time you come on. It's hard for me, but it's a treat to meet you, and I really appreciate you coming and sharing your wisdom.
Thank you so much, Rod. It's been a pleasure.